Thanks for joining me today, Chris Omodei from the NAB in Bunbury. Glad you called into the office so I could nab you for 15 minutes. Sorry to give you the heads up. And Mike Cameron is our specialist consultant based in Busselton down in Bass. So thanks very much for your time and welcome to one of Planfarm's first landlines by video. We're trying something different with the way we get information to our clients, and yeah, I thought today was a good opportunity to talk livestock. There's obviously a lot of questions, Mike, that you and I are getting in the livestock game, and Chris, I think just a good opportunity for you to give us a view from a banking perspective, you know, and how it's viewed, and more so the opportunities and what are they and what we're seeing and what questions we're getting from our clients. So yeah, just a general chat today, but just sort of might start off with, we talked a little bit briefly before we came on camera just about the risk in the farming game now, which I think everyone's very aware of. It's one of the key things that we all talk about with our clients. So Chris, probably from you, in terms of not just risk profile in the business, but how are the banks, how's you and your position and your bank feeling about what risk looks like for farmers at the minute, and particularly with that bit of livestock flavour, I guess, is what we're trying to look at.
Yep. Look, it's no doubt the livestock game's different. Or that livestock enterprise is different for people. You've gone from record highs 2 or 3 years ago to record lows. So you've gone from peaks to troughs and all the other sorts of challenges, and that there's no doubt that creates cash flow challenges. Now, in those record high years, you had the livestock enterprise out of a total business putting cash into the rest of the business. Now it's probably drawing it back out. So
plus with a tough year too. High feeding costs.
It's absolutely, and that's where it all comes in. With everything thrown in amongst. So you got a mixed operation. Your cropping's gone alright, but your feed costs are higher. You're carrying more animals if you're in that hold sort of scenario where you want to grow your numbers. So you're using the market signals a little bit to try and read what we want to do and where we want to go. Do we hold and offload next year? Do we offload now? Depending which path you go down, people need to know what it's going to look like. So what if we get another tough start to the season thrown at us and we're carrying more livestock? What does it look like from a day-to-day point of view?
So enough grain. Is it affordable to feed them?
That's right. You don't want to undertake a 12-month, 18-month, 2-year strategy and 2 months in have to offload stock because you haven't got enough resources to cover the feed costs underneath. So the risk part is very diverse. It comes down to very much a case-by-case scenario.
So Mike, Chris obviously talking a bit about that, what the plan is and where the highs and lows have been. Obviously you in particular, but we both do some numbers around what it looks like for clients at the minute. And what are you saying in terms of how they're doing the numbers and what's falling? Obviously the prices, the signals are strong. Just talking to a few of the consultants in the early part of reviews, average prices per head that were last year in our programs down around $55 and $60 are already starting to hit the 80s and 90s in early reviews. So that's the average price. And that's a lot of stock. That's not just lambs. So we average the price over all stock sold. Still probably pretty conservative, do you think, in terms of where it looks?
Absolutely.
What are you finding? Other questions?
Yeah, so we're seeing kind of $3.50 for good store lamb, so about 38 kilo plus. Probably around that $2.80 to $3 for merino weather lambs. I think the challenge is around the weight of those smaller lambs and trying to get them into a marketable spot. So we're trying to reduce the exposure or risk to the business by lambing later, but then we're dealing with smaller lambs and how we're actually marketing them. And that seems to be the area that's been most hit by prices. So we've seen, if we go back at the bottom end of 23, we were seeing merino weather prices in that light category that were only 80 cents to $1.20. Now we've seen a big change in that we're kind of closer to that $2.50, $3, which is a big step up. But if there's not real clear strategies around how to feed and handle those small lambs, they will just crash and burn. And if we jump on headers, and because most of our businesses are mixed enterprises, we're jumping on headers, we've got these little lambs that are now not worth a lot, we really need to prioritise our feeding processes. Yep.
Yeah, so irrespective of when we're hearing in the marketplace at the minute that the prices on the East Coast are good.
Yep.
They don't have a lot of stock, so they're possibly going to be here
Yeah.
pretty soon to buy in the sale yards or on farm, whichever way. But that price doesn't mean much if you haven't got the marketable lamb, have you? Or
Absolutely.
finished animals. So,
Yeah.
and obviously the castable age, the ewes going out of the system have been hard hit. Seems to be gaining some momentum as well. Obviously still a way to go.
Yeah.
But I think coming back to the margin around that, like, what do you say to your growers? Like, what's the first point of call to say, well, look, I've got these classes of stocks, but what is it? Is it about strategy? Is it being able to do what they have to do to make the strategy work?
Absolutely. I think that's the thing, is we can come up with really good strategies, and everyone loves the concepts and goes, yep, that's great, I can see that working, but the implementation part is really, really hard. We were actually looking at a quadrant just describing the differences where businesses actually sit around achieving execution and good strategy, and we were seeing only 4% of businesses are actually sitting in great execution of a good strategy. So that's really, really hard to achieve. And so particularly when a lot of these adjustments are a result of the margin. So we were seeing some businesses that were lambing quite early that were having a great exposure to risk. And similar to what you're saying, Chris, you've got businesses that are almost hoping for a good breaker season, not necessarily having all the feed strategies in place, and probably being able to keep you informed of, okay, this is, if we get to this point, this is our trigger, or we get to this point, this is our trigger. And I don't blame them, because it's been a really tricky period to navigate, like low water, poor seasons back to back. And so you're really sitting there going, well, I don't want to go and stretch cash flow by purchasing a heap of extra feed, but I also don't want to be exposed by carrying too many animals through and also selling stuff for a heavily discounted price.
Which is what happened last year.
Yeah, like a lot of weathers got killed right through, didn't they?
Yeah, weathers, and then the ewes that went at low prices. So we want to get away from that situation again. So Chris, just on that point, like, what's important for you? Like, if that situation's happening, obviously Mike and I and our consulting team deal with our clients, regularly when they need that contact, I suppose. So what the hell do we do? Yeah. What's important to you from is it about the information? Is it about not just strategy? Obviously, like we talked about with Mike, but can they do it? So what do you put together
the key element of it is having that strategy that you've worked through and that plan in place, and because at the end of the day, the financial outcomes happen because of what the strategy was and how that was implemented. So if you have a good strategy and you implement it well, you'll get better financial outcomes. So that's what everybody's aiming for. Now, can you do that? Is that achievable? If you're relying on a 2022 livestock price to achieve your plan, well, hang on a sec, is that really? Now, that might happen, but at the same time it might not as well.
So you would still ask that question. So in your mind, that you're asking that question about, I can see these numbers, I can see this cash flow that Paul and Mike have put together. Yep. What are the numbers really tested by assumptions? That can be done.
Absolutely. So you're really trying to look at it and go, and you probably take more of a conservative approach. And if there's any upside, that's great. You want to try and cover that worst case scenario. Yeah. If you've got coverage for that, then you've got flexibility in whatever the options are, whatever the implementation or how the market might change. The East Coast guys, they might not turn up. We don't know. Yeah. So the signals are saying that they will, but what if they don't?
Yeah. So I think farmers and our clients in particular are notoriously conservative, which is great when it comes to budgets. But the challenge we're finding now, from a budget perspective, is you're conservative on the income line, but I want to put these costs in to make sure I make every opportunity. The budget's not going to work because you've got a high cost base and the income's just not meeting it. So there is a different strategy around there that we're taking with clients now to make sure that whatever that income base is, that base model, let's say you plan to use extra fertiliser on pasture or fertiliser on crops. If it doesn't reach those yields that you've got in the top line, then you should have some fertiliser left over that goes on the balance sheet. So the money that you've used might still be in cash flow, but it's not in profit.
Yeah,
I think
absolutely.
that's one of the keys. And Mike, I think we attended a conference, didn't we, in late November last year in Perth, the Outlook conference, which was really well run by the AAAC group. And we were talking about earlier off air about cash flow versus the profitability. So what's the use of having cash flow if we're feeding sheep in particular to not make any money?
Yep.
So it's that understanding too, isn't it?
Absolutely.
And that part of that is that strategy. Is it a long-term 2 or 3 year strategy to grow and change genetics or to move down a different animal at the end of it? So a lot of that comes down to that strategy and working it out and go, it might well be for the first couple of years there's a fair bit going out the door, and that might be changing feed regimes, fertiliser, pasture regimes, a whole range of these different sorts of things. That'll all impact the cash flow position, but what's the end game look like? So are we going to have a better business at the end of it, more flexible business, more flexible cash flow and whatever else it is at the end of it? So,
And you're confident in that, though, aren't you? I mean, that's your position to be the bank manager of that client. You're confident that if you can see the underlying assumptions are good and strong, you can see the implementation.
yeah.
There's no lack of support there, is there, from your perspective?
Absolutely. And the key comes down to the plan. And implementing the plan, that's an element of it, but having that plan and strategy to go, this is what we want to do, this is why we're going to do it, and this is what we've done the homework on it with yourselves to look at the different scenarios. They're the situations where absolutely any business has got cash flow behind it. And cash flow, like I said, cash flow could be years away. It might not be months away. So that's okay. There's nothing wrong with those scenarios.
As long as you understand that.
Absolutely. So it comes down to the financier, whoever that is, being able to understand it and say, right, we're going to back these guys in for this 2, 3, 4 year period, whatever that might well be.
Yeah.
Just on that, Chris, so when we're putting in values for stock, how much are you taking into consideration the position or the direction the business wants to go in? So if we're holding, say, ewe lambs and we're putting in the balance sheet for $50, but really what we're intending to do is hold them because there's going to be a big gap in that market, and those ewes that are sitting on a balance sheet at 50 are probably really aiming for 200. How are you guys balancing that and assessing those kind of decisions? Because I see that there's a lot of growers that have probably been in that situation where you're going, today cash flow it's worth X, do I hold it?
Yeah.
And be in a position where, because I don't know what you reckon, Paul, but the market seems to be almost over responding to the pricing signals. So last year a lot of sheep were unmated. And a lot of sheep were joined to terminal, and totally understand why from a cost and a price received. But then you go, how do you I guess manage that with the long-term kind of perspective of seeing that livestock reconciliation in WA is looking pretty ordinary going forward for ewes in particular?
Yeah, well, ewes will be down to, the forecast is maybe 8 million, from the early 90s at the high 20 million. It's a big drop. Obviously though, there's still farmers still in it, still growers and clients in it. That's part of that strategy, I think, Chris, you're talking about. So on that question, Mike, I think last year a lot of stock unmated, lot mated to terminals, and looking like similar this year. So potentially a gap in where the young ewes will come from. So I think that's part of that strategy, isn't it, that you're talking about? And I think behind that you can build then the assumption that ewe lambs will be $150 or whatever the number is. So I think it's that communication about why that number's like it is, rather than just plonking a number in the cash flow of the balance sheet. So
and that comes down to the understanding of, from our point of view, understanding the industry and the drivers and the mechanics behind that, and the more everybody knows about the scenario, the plan, and the flexibility we can build within that, that's where being. And the cash flows, we've carried high fertiliser costs in other years gone by and what have you, and there might well be tweaks and changes over that 3 year plan if we're using a 3 year plan, but you want to make sure you've got whatever scenarios thrown at you covered, so you don't have to exit halfway through and go, hang on a sec, fertiliser prices killed us or something like that. So.
Which is, we saw that happen last year. Prices, live export, decision, deflatedness in the market, all the perfect storm in a bad way. but many growers have got through it and they're still in it.
Yeah.
So from a livestock perspective, you know, even had a client the other day talking about buying ewes. Your thoughts on that? Like, how do you respond to that with a client? Like, obviously, cash flows will be tight if you've been in a tough cash flow season this year. I mean, a lot of the numbers look like they're going to be positive, but as always, the elevated costs are keeping businesses pretty cash flow tight.
Yeah.
Chris, I want to come and buy 1,000 ewes or 500 ewes. Or what does it look like to you? Like, is it about the story?
It to a large degree, yeah, and it comes down to the rationale as to why. Well, are we buying them for other strategic reasons, whether that's business succession planning or whatever else it is, to expand our business a bit more, so we've got a little bit more, lease options, we've got a bit of cropping, we want to just pick our livestock up a little bit to balance the two out. We want to drop our livestock and push our livestock up or crop up or whatever else it is. So it comes down to why we're looking at that. We see an opportunity in the market because of East Coast guys and buyers, and that's okay. It then comes down to what sits behind that and what does that actually look like to make sure there is something, that there is a return out of it.
What's the delay? So let's say, for example, we put in a budget. We're not comfortable with purchasing as much feed, and so we run through. We get a bad break to the year. What timeline is it actually taking for you to assess? Oh, look, I need some extra cash. How quick can you respond? Because it seems like there's been more and more delays in compliance and things like that. So how long do you actually need to, if like let's say we're in, I don't know, late May and we still haven't had a rain, how quick can you respond?
Yeah, good question. It's a good question. It's a challenging one because often in those scenarios, you haven't got one producer on the phone, you've got 15 on the phone wanting the same thing. Yeah. So the ideal scenario is we get through it as quick as what we can. It's hard to put a number on, but you'd want to be allowing 3 to 4 weeks normally as a minimum. You can do it quicker than that, absolutely you can. But what sits behind a lot of that is there's a lot of rigorous assessment which sits behind the scenes, compliance and all those other sorts of things. And the end game of that is protecting, the customers at the end of that. So there is a little few hoops to jump through, absolutely, but there is, reasons for that. So.
And it depends on the level of risk they're already at, isn't it, too, in terms of what they can borrow and
absolutely
at that point.
And sometimes within the facilities, you're always trying to keep some sort of flexibility. So you might say, righto, within your working capital facility, whatever that might look like, and if you're a livestock operation, we want to keep 200 grand up our sleeve for that exact scenario where we need feed, I need to get the trucks in the driveway now, I want to have access to funding to do it and transfer the funds tomorrow.
Yeah.
You can build all that in to your finance package. So there are those scenarios where you're looking at and go, okay, well, what's our worst case scenario, be that of a seasonal issue?
Yep.
What do we need as a get out of jail sort of scenario? And so, right, let's have access to that in one way, shape or form.
So is that actually the case? Because if we're talking to growers and we say, let's put through worst case scenario, which is tough break, no spring.
Yeah.
And then they feel like, well, if I take that to my bank, they're going to see me as this massive risk business.
Yeah.
But it's not necessarily a likely occurrence. So how do we actually balance that up with kind of still keeping you informed with the picture, but I guess wanting to give you a worst case scenario without getting belted for it?
Not frightening the bank.
Yeah, exactly.
Oh,
Yeah.
So and a lot of that, and that's where within the forecast or the plan or whatever it is, this is our base case. This is what we think might happen, and that's what we work on. And we can then go, right, we get a better outcome, or this is what the returns might look like. We get a worse outcome because of those seasonal challenges. This is what it could look like. So from our point of view, you can sort of look at it and go, right, well, if it all goes to plan and everything sails along all right, well, this is what it looks like. If it doesn't, what do we need? Do we have access to that as well? So you might not work on that worst case scenario as being the scenario, but you at least got different options within it and say, hey, it goes better, here's what the outcome is, this is what we expect it to be, and that would be, average prices and all the other sort of stuff like that.
Yep.
But you've got that worst case scenario, do you need cover for that now? Or have you got other cover? You might have grain in store or something like that. You can offload or one of the other elements that sits within that.
So I guess what you're saying, you want that production information.
Mm-hmm.
You want to see how that affects cash flow.
Yeah.
You want to see what cash flow then brings in terms of profit. Is that cash flow really returning a profit, or is the production system driving that profit?
Mm-hmm.
And then what does that affect on the balance sheet?
Yeah.
All the things with a bit of commentary around it about why and the assumptions and what we're thinking about in the plan.
Yeah.
Everything that you get in a plan farm management report.
That's right. That's right. And a lot of that, it is the livestock stuff is you're playing the long game.
Yeah.
A lot of the time you're playing the long game. So it's not unusual for it to maybe look pretty average for a couple of years.
Yep.
And then once you've got scale, you've got your ewe numbers up or your cow numbers up or whatever it is, that's when you really get the returns come through. So don't be afraid of those scenarios. That's just the cycle of the industry. That's the way it is.
I think it's a great point to finish on, is don't be afraid of it. Like what is the strategy in the long term, which is what we're working with clients in. So thanks very much, Chris, for your time. Really appreciate it off the cuff. And stay tuned. Mike and I are going to talk a bit more about the systems and what we're seeing with clients and what's changing and how to do numbers on different changes. So thanks very much for the start of this new lease on Landline.